All right. So good morning to you all. Please let's share the link. Let's share the link so that we can start. We are just 28 here, and we need to be more than this. So let's share the link in our various groups, leaders group, so that they can all join us for us to start. Either way, we are not going to waste my time. So let's share the link here. Let's share the link so that we can increase in number for us to start. Okay. You share the link with your team members, your downline, so that they can join you. All right. So good morning to you all once again. We are about three in numbers, and we are going to start. We are going to start. So please keep sharing the link with members. Let them join us. Let them join us so that we start. Right. You are not going to waste my time this morning. So share the link with your team members and let them join us. You're supposed to be more than 200. So why 54? You're supposed to be more than 200. So why 54? So keep sharing the link. We are starting. Okay. Let me see. All right. I already have a co-host. So okay. So before we start, I guess you're about 59 here. Most sitting 50. And um yeah, so I would love for you to introduce yourself to me, especially your name, and then also where you are joining from, your name, and where you are joining from, the country that you are joining from. If you are joining from UK, you tell me your name, you are Prince, and you're joining from UK. So let me know. So Ambassador Saul, that is my co-host from United Arab Emirates. United Arab Emirates. So that is good. You are welcome. So we also have Tenet from Uganda. Tenet from Uganda, and then also Divine Acceptance. Divine from UAE. We have Ronald from Uganda. Moses from Nigeria. Moses from Nigeria. Then also Zen from Uganda. Zen from Uganda. And Crypto Joash from Uganda. Derek from Uganda. And then also Agnes from UAE. Vincent from Uganda. Vincent from Uganda. Kalu from Nigeria. Then also Sunday from Qatar. Ability from Nigeria. Byron from Kenya. Then Ima from Dubai. Masmina from South Sudan. Gabriel from Uganda. Kwame from Ghana. Kwame, you are welcome. Grace from Kenya, and then also Tolu from Nigeria. Samuel from Ghana. Deus in Uganda, and then also Nasiruddin from Ghana. All right, that's my mentee. So Francis Doha from Qatar. Francis, that is Doha, Qatar, right? Then um Samsung Rice. Oh my god. Is Samsung Rice really necessary? Is that your name? Abuja from Nigeria. Anyway. Okay, so we have Lucas from Tanzania. Lucas from Tanzania. We have Wizy from Johannesburg. Wizy from Johannesburg. So guys, we are about 72 in numbers now. Please keep sharing the link. Invite your team members. Franklin from Tanzania. Franklin from Tanzania. Franklin, you are welcome. We also have Gordon from United Arab Emirates. That is UAE. UAE. So guys, I welcome you all to this morning session where knowledge is impacted, where knowledge is shared, where practice is being done, where we all learn how to make money. Okay. So this is the school of money where we learn how to make money. We also have Joe Bonifa from Papua New Guinea, South Pacific. That is good. So Joe Bonifa, you are welcome from Papua New Guinea. You're welcome. So we also have okay, Buzia Wada. All right, your name. You couldn't mention your name. So joining from Nigeria, good morning, leaders. So that is Kate. Kate, you are welcome. Kate, you are welcome. So guys, we are 75 in numbers now. We are 75 in numbers now. And keep sharing the link. Keep sharing the link. So I welcome you once again to this morning session. Where knowledge is impacted. Afonso from US. Afonso from US, you are welcome. Peter from Uganda. Peter from Rwanda. So, Peter from Rwanda, you are welcome. Then also Blessing from RSA. Which one is RSA? Which one is RSA? Which one is the RSA? All right, maybe you come back to clarify. Blessing. Maybe you come back to clarify. So, guys, this is where we are going to share man knowledge about futures trading. And I've always been saying that it is important for one to learn about, okay, South Africa. RSA is South Africa, right? Okay, then that, all right. So, over here, we learn more about the futures trading, the futures market, because for you to be able to trade and make good profits, it's about understanding. And as the old scriptures says, lack of knowledge, my people perish. Lack of knowledge, my people perish, which simply means whoever wants to grow, if you really want to grow in life, the easiest part of growth is understanding. Seeking for knowledge and understanding knowledge. There are two things. Seeking for knowledge and understanding knowledge is two different things. You need to seek for knowledge and you need to understand knowledge. Therefore, if you lack understanding, it will be very difficult for you to grow. That is the reason why when it comes to trading, you should always make it your best to learn from leaders who will be able to teach you to learn and then also become the best version of yourself for you to be able to grow and rejuvenate your business, right? So this morning, as you are here this morning, it means a lot to the team, and it should mean a lot to yourself for being here to have a wonderful school that will impact knowledge, for you to be able to boost your confidence and also boost your vitamin M. Exactly. So I've always been saying that. Now, the last vitamins the last vitamin that exists is vitamin M. And without vitamin M, vitamin A to vitamin Z does not function. Take notice of that. And vitamin M represents money. Vitamin M represents money. Vitamin A to Z can only function with the help of vitamin M, which simply means if you really want to boost your immune system, then you need vitamin M. And for you to be able to get vitamin M, you need knowledge and earth understanding. That is the reason we are here this morning. So I welcome you all once again. We are about 99 in numbers, and you can also feel free to share your name, where you are joining from. You can also feel free to share your name and where you're joining from before you start. So I'm sharing my screen right away. I'm sharing my screen right away for us to start. So let me share my screen. Okay. 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 So I'm sharing my screen, right? All right, so my screen is visible now, and I guess you can see my screen. So we have Fina from Nigeria, Elom from Ghana. So Fina and Elom, you're all welcome. Fina, okay. So we also have Samuel from Nigeria. Samuel, you're welcome. All right, so guys, let's proceed. So we said futures trading. Okay, let me use my screen. Um, let me use this. So futures trading. Now, one of the interesting forms of trading in the financial market is futures trading. And over here in crypto, there are countless forms of trading in the crypto market. We have the spot trading, futures trading, option, margin trading, swap, and so many, and so on and so forth. But over here on Royal Kill, we are fortunate enough to get one of the best two forms of trading, that is the spot trading and then also the futures trading. So this morning, we are going to take time to grind through, to break it down into similar substances. That is, what do we mean by futures trading? Okay, what do we mean by futures trading? And I guess you're going to take time to follow me this morning for us to be able to learn about this market. So, if you are prepared, let's go. Now, when we talk of futures trading, the idea has to be a comparison between the spots. Since majority of you understand the sports trading, I'll take time to compare spots and futures for you to be able to understand better how the futures market also works, right? So when we talk of futures trading, the futures market is a market based on what we call contract, and this is the reason why the futures market is based on contracts, because the futures market empowers traders by loaning them or borrowing them an amount of money to trade based on the trader's um precisions. So in this case, whenever a trader wants to trade in the futures market, it's a contract that the trader is signing. That is a contract between the trader and then the exchange. And today, I'm going to delve much into how to set it up more than um the foundation. So pay attention to this. So when it comes to trading on the futures market, it's purely a contract, and these contracts can be seen from different angles based on the money that you do have in your account or the money you want to use to trade. So when it gets to the futures trading, unlike the spot market where your actual money is exposed to the market, on the futures money, it's just a little part of your money that is exposed based on what we call leverage. Based on what we call what? Leverage. Which simply means whoever understands the concept of leverage is capable of making more money in the futures market as compared to the sports market. Whoever understands the concept of leverage is able to make more money in the futures market as compared to the sports market. Because on the sports trading, the trader exposes his actual money. But on the futures trading, the trader exposes a little part of his money using leverage. Do you get it? So always, it is always good to understand that. Yes, of course, the futures market is highly profitable, and the risk is also high because of the leverage. Because of the leverage. I guess let me know if you are following. Okay. Okay, please can you different color for writing? Okay. I'm gonna say not seeing your screen. We are seeing your picture. Oh, sorry. All right. So let me see. I guess you can see my screen.
Yes, we can.
All right. So let me use different color to write. So that you can. Let me use different color to write. Okay. So let me change the color. Did I stop sharing? All right. I guess let me use yellow. Yellow will be good for you, right? Okay. So now what we are saying is that when it comes to trading on the futures market, unlike the spot market where the trader owns the assets, over here it's a leverage that you are using based on what? On the contracts. So the trader decides to sign a contract with the exchange. So you see leverage, you see margin, and then also you see price movements in the futures trade. Price movements. And I take time to explain these three things for you to understand them because these are what you need to know about the futures markets. So the first thing is your leverage. So in leverage, you said 10x, 5x, 2x. When you see 2x, it simply means two times of your capital. When you see 10x, it simply means 10 times of your capital. When you see 5x, it simply means 5 times of your capital. So whatever money that you have, the leverage you go for is trying to simplify your trade for you based on the amount of money you have. So if you have $10, if you have $20, and you go for 20, it simply means you're trying to say you want 20 times of your capital. You want 20 times of what? Of your capital. And looking at this, 20 times of 10 is going to give you 200. 20 times of 20 is going to give you 400. I'm using the direct screen, using anything, so please, that one cannot be removed. Provided you can see the writings there. Let's proceed. Hmm? So over here, when it comes to trading on the futures market, when it comes to trading on the futures market, it's about understanding these key concepts. It's about understanding these key concepts in the futures market. And once you understand them, you are good to go. Once you understand them, you are good to do what? You are good to go. So now, when you talk of margin, margin is your actual money. Margin becomes your actual money that you want to use to trade. And then also, the price movement is the minimum amount that the assets begins to rise or fall in value. So if you want us to set up a trade, let's get here. Let me first explain some few terms to you before we proceed, right? So we have the price movement, margin, leverage, liquidation, liquidation, margin ratio, margin ratio. Then the next one is maintenance margin, maintenance margin. Then we have liquidation price, and then cross margin, cross margin, and isolated margin. All right. So all these terms you should be familiar with all these terms in the futures markets. When we talk of cross, what is it? When we talk of isolated, what is this? When we talk of liquidation price, what is it? When we talk of price movement, what is it? When we talk of margin, when we talk of leverage, when we talk of liquidation, when we talk of margin ratio, and then also maintenance margin, right? So over here, anytime you talk about margin, the margin is your actual money, the real money you have that you are using to serve as what collateral in the futures market is what we call it margin. Because in the futures market, you are signing a contract. And since the trader decided to sign a contract, the contract is based on your actual money. And these are the terms and conditions. So for you to be able to trade on the futures market, it simply means you agree. You've gone into an agreement with the what? With the exchange. You agree with what the exchange is saying. That okay, now we are loaning you, we are giving you, or we are borrowing you money. The money we are borrowing you, if you win the contract, you go along with it. If you fail to win the contract, we will have to take that money to compensate our loan. So just like traditional banking, you save money in the bank. If you save money and you want to borrow money, let's assume you have $1,000 there, $1,000. You want to borrow $3,000. They are giving you $3,000 because you have $1,000 there. And the day you fail to pay the $3,000, this $1,000 will be taken away from you. That is how the banks operate. So coming here to this is the exact thing that the digital world also uses to get money and also to give you money, right? So you should always understand. So in the case where the trader is not able to pay for that 3,000 loan that you've gone for, that is when they will take the $1,000 from you. And taking that $1,000 is what over you term as what liquidation. Liquidation. Now, before this liquidation will happen, it depends on certain factors like your liquidation price, your margin ratio, and then it's your maintenance margin. And when we talk of the margin ratio, pay attention and listen to this. When we talk of the margin ratio is the minimum amount, sorry, is expressed in percentages. So from 1% to 100%. From 1% to 100 what? 100%. Now, anytime you set up a trade, sometimes some of you, anytime you set up a trade, you'll be complaining, and I don't know whether I'm going to be liquidated or not. If you want to know how you'll be liquidated, check your margin ratio. From 1% to 4 to 30%, you will see that mostly it is in green. From 40% to 80%, it's mostly in red. Now, when you set up this trade, anytime your margin ratio gets to 80%, the exchange will send you a message that you should either think of closing your trade or add more funds. Now, the reason why one is getting liquidated is because the person don't have enough funds to do what? To trade. The person don't have enough funds to trade. And since you don't have enough funds to trade, you either have to close the trade or you'll be liquidated. So either you add funds you close the trade or get liquidated. That is what it means. So if you decide to add more funds to your trade, then you sustain or prevent yourself from being liquidated. So when it comes to margin ratio, now once the margin ratio gets to 100%, your trade will automatically be liquidated. So until your margin ratio gets to 80%, 80 to 100%, you always have the confidence of trading. And even sometimes it gets to 80%, yet you won't be liquidated because it's a reverse back. Are we learning? If you understand what I'm saying, give me one in the chat. If you understand what I'm saying, give me one in the chat. If you understand what I'm saying, give me one in the chat. If you understand what I'm saying, give me one in the chat. This session is an introduction session. So if you understand what I'm saying, give me one in the chat. If you understand what I'm saying, give me one in the chat. Good. Very good. Very good. So over here in your futures account, you always have that confidence to see your trade. mm, right? You always have that confidence to see how things are going. And once you are able to see your margin ratio, you get the confidence to proceed with your tradings. You get the confidence to proceed with your tradings. That is what it means. So let's go. Hmm? Now, how do you see your margin ratio? We will look at that. We also have what we call maintenance margin. Maintenance margin. Hmm? Maintenance margin. And when we talk of maintenance margin, that is the minimum amount. At least every trade before one will get liquidated is simply like I said, it's simply you don't have enough funds. Sometimes, let's assume you have $150 that you are using to trade, or $180 you are using to trade. Out of this $180, before one will be liquidated, it simply means you just needed a little amount of $3, which will make it 183 to sustain this trade. So once you don't have enough funds in your account to continue the trade, you'll be liquidated. So sometimes when you see the maintenance margin, you realize that you just needed just something small to add up to your trade to maintain your trade. That's the reason we call it maintenance margin. How you can sustain your margin in the market. That is the meaning of maintenance margin. So before one trader or one trade will get liquidated, it simply means your margin ratio, which is 100, which is not supposed to get to 100%, has gotten to 100% because you don't have enough maintenance margin. That is what it is. So sometimes those using OKX, Bybits, and then HCX and stuff, you will see the maintenance margin there. You'll see the maintenance margin. Those using Binance, you will only see margin ratio. You will only see margin ratio. Now, the next thing is about cross and then isolated. Cross and then isolated. So we have the cross margin, then also the cross margin and then isolated margin. Cross margin and then isolated margin. Now, these two forms of margin is important for you, the trader, to understand them and how they work for you very well. Now, when we talk of the cross margin, let me simplify the cross margin or let me explain how the cross margin works. When we talk of cross margin have the ability to trade across different accounts. Okay, so let's assume you have four different trades in the market, four trades in the market. You have Solana, you have SRP, you have BTC, you also have Ethereum, ETH. Now, your actual money is $500. As for the $500, each trade is having $100, $100 each. Now, Before a trade will get liquidated, listen, before a trade will get liquidated, it simply means the funds that you are using to trade has been exhausted. So if it's SRP, SRP has exhausted its funds. So when you are using cross margin, when SRP exhausts its funds and normal is supposed to be liquidated, but cross margin will not liquidate SRP, but it will ensure that the funds Ethereum and BTC are using to trade, it will attract part of the funds into SRP so that SRP too can sustain in the market. You get it? In this case, when a part of these funds in Ethereum and BTC has been extracted into SRP, it simply means they've lost part of their funds into SRP. Now they are all having equal energy or equal funds to trade. So far as all these particular trades are in the market, SRP will continue to sustain in the market. Now they are sharing equal funds, no longer different funds, but equal what? Equal funds. What happens is that if it happens, SRP should get liquidated. SRP wouldn't liquidate alone because now SRP has exhausted everything, including the energy BTC and Ethereum are having. So SRP will get liquidated with all these four trades. Do you get it? And when SRP is sustained in the market too, it is sustained along with all the different trades. So when you are using cross margin, I always say that cross margin is good. Cross margin is good because it helps you sustain your trade in the market. But on the other hand, cross margin got the disadvantage of liquidation where all your funds will be liquidated. All your funds will be liquidated. When you're using cross margin and one asset gets liquidated, all your funds will be what? Will be liquidated. So liquidation is not a friend on the cross margin. By the day liquidation becomes a friend, it brings a lot of sorrow because it leads your efforts into waste, especially if you have more funds in your futures accounts. But then, when you are using cross margin, I always say cross margin is good because cross margin helps your trade to be sustained in the market very well. So it's not easy for one to be liquidated using cross margin because first it has to manage your funds to sustain a trade. It has to manage your funds to sustain a trade. That is the ideal game. But on the other hand, since liquidation is just like uncertainty in the market, when liquidation happens, you will have no hands to control it because it is gone. All right, now what about isolated? What about isolated? Now, when we talk of isolated, isolated is good, and this is how it works. So, with the same amount like the $500 on different accounts, Solana, Ethereum, BT. Now, $500 each, 100 each, 100 each. Once Solana gets to a point where it has exhausted its energy in the market, Solana will liquidate alone. BTC will be in the market, Ethereum too will be in the market. But when it comes to the use of margin, utilizing your margin, isolated is not effective as compared to cross margin. Though it will buy all the margins, but it doesn't buy constant margins as compared to a cross margin. The reason is that cross margin is meant to expose, or your capital is exposed to everything in the market, and then isolated margin focuses on what you've given it to handle. If you understand this, give me one in the chat. If you understand this, give me one in the chat. If you understand this, give me one in the chat. If you understand this, give me one in the chat. If you understand this, give me one in the chat for me to know if you understand. If you understand this, give me one in the chat. If If you understand this, give me one in the chat. Okay, so please explain again. If you understand, give me in the chat. All right. Now, listen. So, which one is better, cross or isolated? Could you repeat the last explanation? Okay. Now, this is what we are saying. This is what we are saying. What we are saying is that isolated margin. So, I'm doing the illustration for you to understand better. Isolated margin focuses on the money you've exposed. So, if you have $500 and you expose $200 to Solana, $200 BTC, BTC, then also $100 to, let's say, um, SRP. What is going to happen is that SRP is going to trade alone, BTC is going to trade alone, everyone is going to trade alone. Now, in the case of margin calls, they will buy margin calls, but they don't buy healthy margin calls as compared to cross margin. This class is to enlighten you to make good decisions. This class is not to tell you what to do, but to teach you how you can think of what to do. Do you get it? It's an open class to teach you how you can think of what to do, the best approach to go for. It's about understanding. You get it? So over here, when you come to cross isolated margin, with isolated margin, the money you have is the only money that is exposed to the market. If you have $20, if you expose $20, $20 will only be the money that will be exposed to the market. And then with cross margin, it neutralize your capital, it utilize your capital. So if you have $500, this is this. So $100 each, 100, 100 for three different ways. So you have $200, right? This remaining $200, if it happens 100, this particular trade gets weakened in the market, which is going to lead to liquidation, it will still add up more funds. If this fund gets finished, it will also add up funds from these particular trades, even though they are already being in use, but they still have strength to control the trade. So it will pull out strength into itself. It will pull out strength into itself to sustain the trade in the market. That is cross margin. So I always say that if you are trading on one asset, then maybe cross margin will be good. If you are trading on multiple assets, isolated will be good. So that if it happens, liquidation should happen. All your trade will be liquidated at the spot, but just one that will be what will be liquidated. So in all, cross is good, isolated too is good, but it is good depending on what you are doing in the market. Listen to me. Cross is good, isolated is good, but it is good depending on what you are looking for in the market. So if you are trading on just one asset, cross will be good for you because it will only use the margin calls for you on that same asset. But if you are trading on multiple assets, then maybe isolated will be good. The reason is that with isolated, when it happens, liquidation should happen. It will only liquidate one asset and not multiple assets. If you understand that, give me one in the chat. If you understand that, give me one in the chat. If you understand that, give me one in the chat. So if you have little capital, choose to go for isolated. If you have little capital, go for isolated. If you understand that, give me one in the chat. All right. Now, how do you figure out all these things in your real queue and then in your exchange? Let's proceed. How do you figure out all these things in your Royal Kill and your exchange? So let's go to Royal Kill. So over here, we have our trade. You open your Royal Kill account. Okay, so you open your account now. This is your Royal Kill, right? So you click on futures. You click on what? You click on futures. Know how to set it up first. You click on futures. If you've not added those assets, you click on manage to add. Hmm? Now you scroll down. Let's see any of these assets. You click on it. Now, after clicking on it, you click on create. When you click on create, you are seeing two things here. You are going to see long. Let me change the color. You're going to see long and then also short. Long and then short. Now, if you want to go on short, you click here. If you want to go on long, you click here. So after that, you click on trade settings. You click on manually create. After clicking on manually create, you come here and clean this. We check out to see this here. It says 7 ADA is equal to 5.4446 USDT. 5.4446 USDT. Check out your calculation. Let me see if I can set up a trade too so that it can reflect in the exchange. If it's able to reflect in the exchange, it will help us to able to know where we identify the margin ratio. And then so let's see, let's go back. Let me see if I have enough funds here to trade. I don't know if I have funds here. All right, let me log out from this account. All right, so guys, excuse me, okay? Let me stop sharing. Okay. All right, so let's proceed. Let's proceed. Okay, so I want you to understand something. That's the reason I'm doing this. So I want you to understand something where you can identify. I don't have any ongoing trade. So where you can identify your. Okay, is my screen visible now? Someone saying your screen is not visible. Is it visible now? So can you show? All right, let's proceed. Let's see if we can do that. Now, um, let's go to Royal. Okay, so on Royal, click on futures. Mm, 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 mm. So Password. Hash. Alright. So I'm not going to set up a trade. Hold on. Maybe any trader that I will set, I have to close it because I'm not seeing good opportunity. So any trader I will set, I have to. So I'm not seeing good opportunity yet. Okay. Now, so after setting up the trade, I want us to just have a single trade that we will use as practical in our lesson this. Okay. I want us to get a single trade that we use as practical in our lesson this morning. Mm, 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 mm. Okay. Okay. So let's use this asset. So trade settings. Now, after clicking on trade settings, you click on manually create. So over here, I'm going to use something small. So mm, let's do that together. So let me add 0. Let me see. So I'm going to use 10x, then 1.1.5 USDT. Okay. So so I guess I'm wasting too much time. Yes. So after using this 10x, now let's look at it. 82 divided by 5.045. So let's get a calculator. 82 divided by 5.0245. That is going to give us 16.320, right? So 16.320. Now I'm going to use $30, so it's going to be 300. So 16.230 times 300 is going to give us 4,869. So let's go there. Okay, 4,869. So let me change this to 9. Okay, because this is good. So let's click on save. Good. All right. Now we've set up the trade. Okay, we've set up this trade. So I want us to use this opportunity to learn something. So after setting up the trade, what we are saying is that let's go into our exchange. You will see the margin ratio. Let's go into our exchange. We will see the what? The margin ratio. So whenever you set up the trade, this is what we are saying. So let's go back. Now, let's go into our exchange. Okay. Are you following? Are you following? Let's see the trade. So confused. So over here, this trade. Okay, so this is the trade. Oh, what is that? Okay. Okay, so now this is the margin ratio. Listen, this is the margin ratio. So let me change the color to blue. And so this is the margin what? The margin ratio. Hmm? And then this is the liquidation price. So those who want to know or who want to see where the margin ratio is located, this is the margin ratio, which is now 10.6%. 10 point what? 6%. And then this is the liquidation what? Liquidation price. Do you get it? So anytime you set up the trade, you will see the margin ratio and then also the liquidation price. So this was our entry price, and this is the liquid because we are on long. We are on long. It's simply when the asset drops, it's going to go what against us. When the asset drops, it's going to go what against us. That is the reason why we've got the liquidation price below the price of the entry or the entry price. Do you understand? Do you understand? If you understand, give me one in the chat. If you understand, give me one in the chat. And give me one in the chat. If you understand, give me one in the chat. If you understand, give me one in the chat. Very good. Very good. So over here, all what we are doing is that we just want to know how safe our trade is. Looking at this angle, look at this particular trade here. Now you are seeing your margin ratio. Hmm? Then you are seeing your margin ratio. So this is your margin ratio. This is your liquidation price. Then this is called the return on investment. The return on what? On investment, right? So let's go to Royal Q. On Royal Q, this is the trade. On Royal Q, this is the trade. Just you need to refresh it. On Royal Q, this is the trade. So you have the trade here, right? So over here, let's click on it. Let's tap on the trade. So on this particular trade, you are seeing your liquidation price here. This is the liquidation price. This is the take profit trigger price. So when we talk of the take profit trigger price, that is the price at which your trade will be trigger for profit. Do you get it? The price at which your trade will be trigger for what? For profit. That is the take profit trigger price. Right? Now, let's assume we want to set up a stop loss for this particular trade. You want to set up a stop loss for this particular trade. You click on close. Now, if you click on close, you can see this here. Please enter trigger amount. So if we want, and then this is the percentage so far the trade is trading at. That is 0.3%. So whatever profit you are making is located here. The percentage of the profit is located here. Now, since we want to set up a stop loss, sometimes setting up a stop loss depends on two things. One, Either you analyze the signals and you know where to position your stop loss, or two, you've set up the trade already. Now, if you set up the trade and you want to set up a stop loss, first check the current price. Second, check the average price. That is it. Check the current price and the average price of the asset. Once you check the current price and the average price of the asset, you are good to go. You are good to do what? Good to go. Now, when you get here, this is the average price. We are on long position. And since we are on long position, when the asset goes down, the market is going to go against us. So what we are going to do is that we will set up a minimum amount that if the market goes against us beyond that or below that, we want our trade to be closed. So 0 point, let's assume 0, what's that? 0 point, okay, come to the trigger price. So 0.06, maybe 5922. Okay, so over here you click on what? 100%, which simply means when this is take profits trigger price, which simply when the assets rise to this extent, you're going to make profits. Now, in the case of our liquidation price or our stop loss, 0.04. Good. So as we use 0.04, it simply means when the asset drops to 0.04, that is when we will be liquidated. So let's say 0.063000. Now looking at this, when the asset drops to this point, when the asset drops to 0.0000, that is when you'll be liquidated at the loss of 8 USDT or 8.11141 USDT. Do you understand? Do you understand? If you understand, give me one in the chat. If you understand, give me one in the chat. Now, we've talked about stop loss here. Listen, what we are saying is that if you want to set up a stop loss for your trade, it's not difficult. In fact, let me close this trade first. Let me close this trade first. 1% is okay for me. Let me close this trade. Very good. Close that trade. So I've already gained 1% here this morning. Hmm? Are you following? Are you following? I've already gained 1% here by trying. Anyway, let's proceed. So those of you, if God permit tomorrow, you'll be doing live trading. If God permit tomorrow, you'll be doing live trading. And I guess you wouldn't miss it. So yes. Now, what we are saying is that as you set up the trade, we have what we call stop loss. Hmm? We have what we call stop loss. Now, me, I'm not a guy of stop loss. I'm not a guy of stop loss, but then stop loss is seen in two sense. Do you get it? Stop loss is seen in two sense. The idea of stop loss is to prevent you from losing excess money. So your trade wouldn't trigger for liquidation. So in a case where, let's say, where is it? In a case where your trade is getting triggered for liquidation, when you have a stop loss, so this is it. Let me use this bar to explain how stop loss works for you to understand. No longer the chart. So let me use this thing for you to. So this is one bar here, and then this is your liquidation price. Now, this is you entered on long, so you are following this. So this is your ceiling point where you are expected to make profits. Now, this is your entry price. Now, this is your liquidation point. When the asset drops to this point, it will be liquidated. So you set up a bar. That is the amount. When the asset drops to this angle, this point here, I want the trade to close automatic. I want the trade to do what? To close automatic. That is what it means by a stop loss. Meanwhile, the other person would decide to open more margin calls. And when you open margin calls, there is no probability that the trade will get to this place. The trade can get below your stop loss and still revert back into profit. So what we are saying is that if you want to set up a stop, just look at your direction, then set up an amount below the current price of your direction. If the market is going against you, set it below and you make that will be your stop loss. I guess you understand. I guess you understand. Definitely trades do come back. As we set up this current trade, well, the trade that I just closed it, the market reversed. It was going against us a little while before it's rise. So always one thing that you need to understand is that that's the reason I've always told you that me, I'm not a friend of stop loss. Stop loss is a cheat to prevent you from hitting your targets. Of course, you can do. So let me answer your questions. You setting up a stop loss and adding more margin calls. Which one is efficient? Setting up a stop loss and adding more margin calls. Which one is efficient? Now, it depends on you, the trader. Trader has always got different purpose based on the trader's need. I would prefer to go for more margin calls because now if you set up a stop loss, you are just closing up your effort of opening more margin calls. Because what is the essence of the margin calls? Since you don't want to buy more, you want your trade to close at a certain point. And if you want the trade to close at a certain point, what is the essence of the margin calls? The margin calls there is there to fulfill the gap, to buy more for you while the market is going against you. Now you've made up your mind that no, I want to set up a stop loss to close the trade because I don't want to lose more, right? So that is it. Can one substitute stop loss with hedging? Stop loss is not a friend of hedging. Stop loss is not a friend of what? Of hedging. Hedging is a different concept. If you are hedging a trade, listen. If you are hedging a trade, listen to me. If you are hedging a trade, we are just seeking for another way to make profit. Hmm? We are seeking for another way to do what? To make profit. That is the meaning of hedging. The trade is on long. The market is on short. There is an opportunity on the short market. So you just want to hedge the trade to make profits. That is all. So hedging is not a way of substituting to stop loss, or stop loss is not a way of substituting to hedging. Do you get it? Show me your margin configuration. Show me your margin configuration. Margin configuration on which one? I've closed the trade. I didn't open any margin calls for that. I've closed the trade. Is it possible to set cross or isolated margin on Royal Kill? So if you want to set up a cross or isolated, you must change it in your exchange. Do you get it? You have to change it in your exchange and not cross and isolated is not fixed in, cannot be seen in Royal Kill, but rather in your exchange. You can also use stop loss to secure more profits if the trend is favorable. That one is not stop loss, that one is take profit. It is called actually, the name is not ideally, it is called trigger price. Do you get it? It's called trigger price. Do you understand? The name is not it is called trigger price. So a trigger price may be a trigger price for stop loss and then also a trigger price for take profit. Do you get it? Very good. Now, is it advisable to have more than 20 margin calls for safety from liquidation? Yes, of course, you can do that. Of course, you can do that. How to change leverage in OKX? If you want to change OKX for now, I don't have any feature set up in OKX that I can take you there. I'm only having some few holdings there. Now, in OKX, since you set up the trade, if once you set up the trade, you go into the OKX account, you will see leverage. Even on Binance and all exchanges, anytime you set up a trade, you will see the leverage there. Click on it and change it. You either you want to increase it or decrease it. Just click on it. Once you click on it, that is all. You turn it to maybe either 5x, 10x, or 2x, whatever you want to use. So can I change? Okay. Can I change leverage after certain trade? That one can only be done in your exchange. It can be done in your exchange and not Royal Kill. Before you do that, first think of it about your calculation. Listen, let me explain this to you. Let me see if there are any hands up. If there are any hands up. Okay, one hand is up. I'm coming home. Listen, let's assume. Can you see my screen? You can change the leverage in the exchange when the trade is running. Listen, you can change. Listen, when you set up the trade, let's assume you want to use $100. So your margin amount is what? Is 1,000. Mhm. Very good. In Royal Q. So okay, for those using OKX, listen. For those using OKX, listen. Your leverage is 10x. Your amount is 100. Okay. Oh, who is doing this? Who is doing this? Who is doing this? Now, if your amount is, let's say, if you want to use $10, which is 10x, but actually in your OKX, in your Royal, you can only use 1x. So do the calculation first, then go and change the leverage there, and it will just tally everything. Which means if you use 100, if you have 100 in your Royal Kill and you go into the OKX, you will see what? 10. Do you get it? If you have 1,000, you will see 100. If you have 2,000 and you go into say OKX to make it 10x, you will see how much? You will see 200 or 20. If it is 200, you see 20. That is what it means. So just do the right calculation, and after doing the right calculation, you find yourself getting the right things done in your OKX account. So you can't change when you can change. That is in your exchange, not on Royal Cure. Listen, in your exchange, not on Royal Cure. All right. So let me listen to the hand up. All right. So Kate, you've been asked on mute. Ask your question. You've been asked.
Good morning, my leader.
All right. Good
Please,
morning.
I have a serious issue I want to share for remedy. I'm trading a coin, so I noticed that it will favor me to sell because it has been so long. I've been on the coin, on futures anyway. So I decided to sell half of it, so 50%. I sold, and in my Binance, I'm using a stop loss in Binance. So when I sold, part of the half of the trade, remaining half of the trade, I visited my Binance and saw that the position has been closed. No more position there, and the stop loss had vanished. So I have been battling on what to do, how to restore the stop loss, and so on. So I finally noticed that Binance sold off. That is like they sold off entirely, but the Royal Q, the coin is still running in Royal Q. So I tried stopping the coin on Royal Q. Since Binance had closed a position, I couldn't do that. I did a lot of things. I tap on stop. If I tap, the coin will vanish. You won't see it. But if I come back again, I will see it running. it will still be running there, but already Binance has closed the trade. So
Yes, hold on,
later
hold on.
this morning, sorry,
Okay, I'm
later
listening.
this morning, I now saw that my Binance account was banned from a futures trading. I don't really know what the issue is.
All right. I guess you are in Nigeria. Mostly those in Nigeria, it's normal for your account to be banned because I think Nigerians are prohibited to use futures on Binance.
And I
So
never knew that.
yeah.
Never
So
knew.
that's for most Nigerians. It's good to use either Bybit or KX. Those things are good. You get it. So
Yeah.
that is it. Now, the next thing is that anytime you close a trade um in your exchange or the exchange close the trade, if it happens that thing happen in your exchange, you receive what we call abnormal order. Do you get it? You
Yes.
receive what we call abnormal order. So when abnormal order happens, that is when you see those complications in your real QI. So always be careful with abnormal orders.
No, I don't really have abnormal orders. I'm talking to you now. That one is still running. It's still showing that it's running. But it's like Binance didn't communicate then that it has been closed. It's still running. I want to close it, but I don't know what to do to close it. I've done all I
Yes, it's
could.
an abnormal order. So just go and close it anyhow, then end that particular trade because it's not going to yield any results. At the end, if it gets into profit, you will not get the money because the trade has been closed in your exchange. That is the meaning
Yes.
of abnormal order. So you have to do that trade so that everything will be off since you don't have the actual money. It is a bot. Listen, one thing that we all need to know is that Royal Kill is a bot, and since it's a bot, it can only follow the instructions you do give it to it, right? It only follows the instruction you do give it out. So without you being able to handle those things, they'll still be hanging. So if the close is trade in your exchange, you have to go to Real Kill and then try your possible best enough to find ways to close that particular trade there because it will still be wasting time without doing anything. All right, so made a mistake running two markets at the same time since date 23. I was stuck in the market until now. That what can I do? Get out of this stagnation. Well, I don't know how what you are talking about, but if I understand you well, yes, you have two trades in the market that are kept long. So what should you do? So far as your liquidation price is not triggering, so far as the trade, your margin ratio and your liquidation price has not been triggered, I guess you can leave the trade to run. So far as your liquidation price and your margin ratio has not been triggered, if it's safe enough, you can leave it to run. Yes. And mind you, I made a mistake. Now listen, in futures, don't go into futures with I mean, if you go into futures trading with being excess mistakes, you will always pay for it. You get it? You always pay for it. So be careful with the mistakes that you do. So can you demonstrate how you can take profits in Real Q like the one you did with stop loss? I just did that anyway. Okay, so some are saying we are trading futures on Binance in Nigeria, but users should stop putting VPN on when using Binance. Okay, users should stop putting VPN when using Binance. So this is a colleague from Nigeria. So please take notice of that. Trading of futures in Nigeria is not banned in Nigeria by Binance. A lot of us are doing it. Oh, okay. That is the news I heard though. That's what I heard. So may not be verified information. Sorry for that. So if you have sports running, can you run futures as well? Yes, you can. You can do that. So if you have sports running, can you run futures as well? Yes, you can. So is it normal to stay so long on the market? Yes, of course it is. So far as your take profit has not been triggered, it is normal. I had similar issues. I wanted to close an order in the Royal Queue, but it wasn't able. So I closed it at Binance. Later that I was able to close it in Royal Queue and I had abnormal order. Yes, that is it. So always be careful of abnormal orders. And if you record excess abnormal orders, Royal Q2 can ban you. Take note of that. Abnormal order is a cheat. Abnormal order is what? It's a cheat. Abnormal order is a cheat. And be careful of abnormal orders. So don't use VPN. Don't tamper with a running trade in Binance. Yes. So that is what the Nigerians are saying. Futures trade on Binance is not banned in Nigeria. Okay. Futures trade on Binance is not banned in Nigeria. So there's problem that a lot of people are not able to use Binance. And if you are in Nigeria, if you want to use, the best exchange for you to use is Bybit or OKX. Bybit or OKX will be good for you. So yes, that is trade future in Nigeria, but don't put VPN on when using Binance. Okay. So those in Nigeria, this is your information. Don't put um VPN on. So if you choose to trade on cross margin, how can I know what assets the bot is trading on? I don't get your question. If you choose to trade on cross margin, how can I know which asset the bot is trading on? But still, you still see the same assets. You will see the assets. If you are trading Solana and it's on cross margin, you still see that it is Solana that you are trading on. How do you change leverage from the exchange when the trade is running in Royal Q? So I said this is for those in OKX, not those using Binance. You first have to do the calculation right. If you do the right calculation, you can change it. But if you have anyhow calculations, you receive abnormal order. That is it. All right. So let me see. Okay. So I guess that is all for this morning. Guess that is all for this morning. There is no hand up again, and there are no questions to ask. So how do you change the leverage from exchange when the trade is running? So for the sake of those using Bybit and OKX, I don't have any ongoing trade on Bybit, neither OKX. You have to do the settings in your Royal Queue. By doing the settings, just like you setting up your trade and then going to use changing everything from cross to isolated, that is the same thing. So go in your exchange, tap on leverage, tapping on leverage, change it nicely. That is all. Maybe I have to set up some funds there to send those things to you. I'll do that. All right. So guys, let me end here. If God permits, tomorrow we'll still meet again. So can you give a little explanation about these two modes, real-time settlement and then also how whole warehouse mode, the impact in futures? The impact is still the same as the impact on the spot. The impact is still the same as the impact on the spot. So if you don't have the idea on the spot, then that would be another different thing. But the difference is still the same. Just as the real-time settlement buy the assets in batches and give you your earnings, that's the same thing that it does, just like the sports trading. So one thing that you need to understand is that the futures market is not exception from the sports, just that there are some different different things that relate. Okay, you get to know that. Now please, what if you have issue unable to close trade in Royal Q? How will you go by it? What if you have issue closing trade in Royal Q? And definitely the trade will be closed, but sometimes it may be network issues, sometimes it may be different challenges, but then definitely the trade will be closed. Not only you are not in that, sometimes you set up a trade, you want to close it, and you find it difficult closing it. It may be network issues. You take your time, continue doing, keep trying it, and then as you try it, the trade will be closed. Yeah. So what is fund fee? Is it charged automatically after selling in Binance? Oh. I didn't talk about funding fee today. I didn't talk about funding fee today, but then funding fee is not charged. Is it charged automatically after the sell in Binance, not after your sell in Binance? Though it is charged automatically. Funding fee is not something that it's paid or charged to Binance accounts, but then it's a fee that both buyers and sellers earn. You pay, I also pay. I earn, you also earn. That is how the funding fee works. It's automatically deducted according to your position amount or based on your position amount. That is how it works. So maybe on our next session, I will have to expand more on funding fee. All right. So let me see. Okay, so guys, guess we're gonna end here. If God permits, we will still meet again on our next session. So let's end here. If God permits, tomorrow we will meet. So in the absence of no question, we bring this session to an end. Let me see. Kindly elaborate how margin ratio works. I've just explained margin ratio to you. Hmm? That is the reason I set up that trade. So whilst I was setting up the trade, if you saw that trade, you said margin ratio, it's just a detection. It indicates to the trader what is happening. Then you are going to be liquidated or not. That is all. Either you are going to be liquidated or not. So when the margin ratio gets to 100%, you'll be liquidated. When it's 80%, you'll be one of being careful of getting liquidated. That is all. All right. So guys, let's end here. Yes, it will be dropped. Let's end here if God permits. Tomorrow we will meet again. If God permits, tomorrow we'll meet again. I wish you all the best in your trading journey and have a good day. Bye bye bye. Love you all.